Here is a summary of AMC's Q2 2025 earnings call, designed for clarity and readability when spoken aloud. Introduction. Good afternoon, everyone, and welcome to AMC's second quarter 2025 earnings webcast. Today, we have Aron, our Chairman and CEO, and Goodman, our Chief Financial Officer, to discuss our performance. Please remember that forward-looking statements made today are based on current expectations and are subject to various risks and uncertainties. Key financial highlights for Q2 2025. AMC experienced a remarkable turnaround in the second quarter of 2025, demonstrating strong operating leverage driven by a robust industry box office and exceptional execution across our theaters. Global attendance. We welcomed nearly 63 million guests worldwide, a significant 25.6% increase compared to the same period last year. Consolidated revenue. Total revenue surged by 35.6% year-over-year, reaching $1.4 billion. In constant currency, this growth was 34.1%. Adjusted EBITDA. This was a standout metric, with adjusted EBITDA increasing by an impressive 391.4% to $189.2 million. This represents nearly a five-fold increase from the prior year. Net cash from operations. We generated a positive $138.4 million in net cash from operating activities, a substantial improvement of $173 million compared to Q2 2024. Free cash flow. The company generated $89 million in free cash flow, a $168 million improvement year-over-year. Record per patron metrics. AMC shattered previous records for revenue per patron. Admissions revenue per patron reached an all-time high of $12.14, up 7.5% year-over-year. Food and beverage revenue per patron climbed to a record $7.95, an 8.3% increase year-over-year. Total consolidated revenue per patron hit an unprecedented $22.26, an 8% increase year-over-year. Notably, total revenue per patron is now up approximately 43% compared to pre-pandemic 2019 levels, largely driven by a 56% increase in food and beverage revenue per patron. Contribution margin per patron also saw growth, up 5.2% year-over-year to $14.48, which is about 48% higher than pre-pandemic 2019. Management's forecasts and outlook. Industry outlook. Management views the strong Q2 box office not as a spike, but as the beginning of a sustained resurgence for the industry. Q3 2025 expects some seasonal box office weakness and tough year-over-year comparators. Q4 2025 anticipates the strongest quarterly box office in 6 years, driven by a highly compelling film slate including major releases from Disney, Universal, and Paramount. Full year 2025 expected to be the biggest post-pandemic box office year, potentially $500 million to $900 million higher than 2024. 2026 outlook projected to be considerably stronger than 2025, with a robust film slate and spillover benefits from late 2025 releases like Avatar, Fire and Ash. Significant risk factors. While optimistic, management acknowledges the overall industry box office remains lower than pre-pandemic levels. The inherent uncertainties in forward-looking statements. Factors beyond the company's control can impact future results. Highlights exceptional operating leverage. As revenues grow, adjusted EBITDA can soar. Strong film slate. A robust industry box office driven by a compelling lineup of major studio films. Record per patron spending. Consumers are spending more on tickets, food, and beverages. Balance sheet fortification. Successful debt transactions in July have extended maturities and reduced financial leverage. Loyalty programs. AMC stubs and A-list continue to drive engagement and loyalty. Premium offerings. Continued investment in IMAX and Dolby Cinema is yielding positive results. Pricing strategy. The 50% off Tuesdays and Wednesdays initiative, coupled with strategic price increases on other days, has been successful. NCM agreement. A new deal with National Cine Media is expected to provide significant financial growth. Potential for acquisitions. Attractive acquisition opportunities are being considered. AI integration. Exploring AI for operational efficiencies and strategic advantages. Lowlights Q1 2025 weakness. Management acknowledged a historically weak first quarter of 2025. Continued box office gap. Despite recovery, the industry box office is still below pre-pandemic levels. Q3 seasonality. Anticipated seasonal weakness in the third quarter. Most important statements from management. Aron, Chairman and CEO. AMC showcased the impressive operating leverage that is inherent in our business. As AMC's revenues grow, our EBITDA can soar. We firmly believe that this was not a short-lived spike, but rather the beginning of a sustained and powerful resurgence for our entire industry. In Q2 of 2025, we saw revenues rise by more than 35%, nearly quintupling our adjusted EBITDA, showcasing impressive operational leverage. My previous assertions have been validated by our recent performance. Our fourth quarter of 2024 showed an 18% increase in revenues, leading to a tripling of year-over-year adjusted EBITDA. Regarding the NCM deal, reports suggesting we're cutting back are misleading. We have a solid, long-term agreement with NCM. On AI, we see opportunities to leverage AI in various aspects of our operations. We are currently in discussions to make small investments in AI technology-enabled companies that have promising prospects in the entertainment and movie industry. Sean Goodman, Chief Financial Officer. Substantial year-over-year industry growth drove our attendance growth, which when coupled with record-breaking per-patron revenue and per-patron profit resulted in an outstanding set of results for the second quarter. These results highlight the significant operating leverage, as Adam just mentioned, that is inherent in our business. Our consolidated contribution margin per screen was, in fact, 9% above Q2 of 2019. This all illustrates our conviction that the industry does not need to fully recover to pre-pandemic box office levels for us to achieve pre-pandemic levels of adjusted EBITDA. The collaborative and transformative transactions announced in July strengthened our financial position by enhancing liquidity and addressing near-term debt maturities, and lowering our financial leverage. We continue to anticipate being free cash flow positive for the 9-month period ending December 31st, 2025, assuming that the box office performs in line with our expectations. In conclusion, AMC delivered a very strong second quarter of 2025, exceeding expectations with significant revenue growth, a dramatic increase in adjusted EBITDA, and improved cash flow. The company is well positioned to capitalize on the recovering industry and has taken significant steps to strengthen its financial foundation. Thank you for joining us today.